presenting Navigating the World of Sustainability Reporting. I just want to say welcome to all the new joiners in this webinar series. And also, I want to welcome my old students who are used to hearing my voice. So, today, I hope this session is informative and adds value. So, a little about myself. My name is Nadia Gassab. I'm a senior lecturer here at BIBF, and I'm in charge of the Risk and Sustainability Academy. I have 15 years of risk management expertise, and for the longest period of time, I headed the Market Risk Department at BBK, and my last role was AVP Senior Market Risk Manager at GIB. I am Sustainability and Climate Risk Certified. Additionally, I have a few papers now published by Crimea on sustainability reporting. So, sustainability reporting, as you're all aware, is the hot topic today. And this year, all the organizations are actually mandated by end of year to publish their sustainability reports by the Central Bank of Bahrain. So, what we will cover in this presentation are a few things. We will first introduce what is meant by sustainability ESG reporting specific, the significance of the reporting. We will talk about standards. And when I'm talking about standards, I will differentiate the standards from the frameworks. So I'll explain how both reporting agencies are different. And then I will talk a bit about the GRI, which is the most widely recognized reporting agency. And finally, I will end it with explaining how to read the CBB reporting guideline that was published in November 2023. Now, the whole aim of these webinar series is to educate and upskill. So it's not about anymore just finishing a task or checking the box exercise. It is about improving your ESG reports. It's about adding value and impact. So we want to as well improve your overall reporting, management and performance, your overall understanding. And finally, here at BIBF, we offer support to educate you regarding to this topic, step-by-step training on how to deliver the ESG reporting process. So what is the ESG process? Now, the ESG framework is divided into three pillars: environmental, social, and governance. And I believe at this stage, at this time, I don't really need to spend so much time explaining ESG. I'm meeting students and professionals on a daily basis here at BIBF, and I must say, I'm very impressed with their level of knowledge. They realize that sustainability is not only about environmental, but it's much more than that. It's about also achieving social pillars such as diversity, automation, globalization, and governance is the executive pay, shareholders' rights, board diversity, all of these topics. And especially when it comes to governance, as financial institutions, because I realize that probably most of the attendees of these webinars are for financial institutions. What really matters from us when it comes to the ESG framework is to increase our governance and our transparency in specific corporate governance. So what is sustainability reporting? Now, as it says on the slide right in front of you, it means adherence to economic, environmental, and social policies. And the way that I really like to express it best is your opportunity as an organization to tell the world outside your progress, what you are doing with regards to sustainability. And when you know what is sustainability and the ESG framework, you will realize that there are a lot of things that we already do. Before we even introduce the ESG concept, for example, health and safety in manufacturing firms is done way before the introduction of this concept. So now we have an opportunity to showcase it in the sustainability reporting. And the sustainability reporting, you have to be mindful that it will be read by various stakeholders, such as customers, regulators, suppliers, and it will give the company a competitive edge. when all these stakeholders realize that all their needs and wants when it comes to environmental, social, and governance needs are answered to in the sustainability report. So it enables the company to be more transparent about the risk and opportunities it faces. Again, as any banker, we all are aware that, and actually any practitioner in any industry, we're all aware that sometimes when we disclose our financial position, it becomes like a communication tool to the public. For example, when you disclose your profitability figures, you're telling the world outside how well your company is performing. When it comes to banking, when we communicate our capital adequacy numbers, we want to give the customers a good assurance that as banks, we are safe in case of any risk. Likewise, with sustainability reporting, when you tell the world outside of all the risks and challenges you are facing, and in addition to the opportunities, you communicate to the public all the things that they should be expecting that your organization will go through in the next 1 year. And since the shift to ESG disclosures has officially become mandated, and these disclosures are gaining momentum, they will drive the way you are writing the sustainability report. Now, since the CBB disclosures that were published in 2023 were mandated, but the good news is that with every initial report, it's not yet that complicated to achieve. So, as a first step to preparing the sustainability report, you can easily prepare it with the existing disclosures. And as Larry Fink said, without a sense of purpose, no company, either public or private, can achieve its full potential. So we really have to adhere to where we're going. We have to adhere to regulatory guidelines. And again, we have to adhere to our stakeholder needs in preparing sustainability reports. Now, why conduct ESG reporting? I talk a lot about stakeholder because stakeholders is a concept highly embedded in the sustainability framework. You see, sustainability is a stakeholder-centric approach. It's a win-win approach. And if we look at the various stakeholders that I've listed in the slide in front of you, to be honest, they're much more than this. But as an example, if we take investors, investors expressed that ESG performance will drive what business results and expectations of disclosure. And 93% of 54 private equity firms believe that it can generate strong investment opportunities. So sustainability is actually a new market. And like the case with any new market, there are new business opportunities that we can find and utilize and increase our market share. Now, stock exchanges, as you're well aware, that Bahrain Bourse has published its voluntary ESG disclosures a few years back and has been actively promoting ESG, let's say, guidelines in Bahrain and adherence to the guidelines and all this financial literacy that has been going on, which is in line with sustainability practices. Actually, has been going on in the world. So stock exchanges have mandated or plan to mandate TCFD reporting by 2025. One thing you need to know about TCFD, for those who don't know what it stands for, is the Task Force for Climate for Financial Disclosures. And this was a principle-based approach that was published as a guideline to show people how to write their sustainability reports. However, the IFRS organization took TCFD under its umbrella post the COP28. So we no longer have TCFD framework anymore. IFRS took over it. So this is what you need to know about the TCFD. Now, customers, 70% of customers are willing to pay premium for brands that provide transparency on ESG for the simple reason that the newer generation, like Generation Alpha and Generation Z, are those generations that really give importance to um, sustainability issues, for example, like organic food and transparency by organization. Even the organizations that they work in, they want to work for organizations that give back to society. So, as an organization, if we do not adhere to ESG risk, not only we will lose customers, but we will also find it in the long run harder and harder to employ. Now, this is taking us to the employees point. So 79% of millennials surveys consider a company sustainability action when choosing where to work. And competitors, the competitor framework is not something new to organizations. We usually do look at our competitors when we try to tackle any new guideline. Likewise, with sustainability, so 96% of the world's 250 largest companies by revenue actually report on sustainability. And fun fact, a lot of organizations in Bahrain, as you've seen, they have reported on sustainability before CBB mandated guidelines. And you might ask, why would they do that? For the simple reason to gain all the previous benefits by the other stakeholders, to look good for the customers, to attain talent in line with stock exchange mandate, voluntary mandates, investors' opportunities, and new markets. So, in line with what I've been saying, it will give the company an enhanced valuation. So, according to investors, strong ESG will deserve a premium. Now, this premium will demonstrate that as a management, as a governance on top of this firm, you are doing a great job in tackling all new issues. And sustainability is one of the upcoming risks, according to the World Economic Forum, that is coming in the next 10 years. So, as a management, when you look in the long run, this company is a promising company because it means that this company will go concern for the foreseeable future and will survive. Hence, more customers will come to you, hence, more employees will want to stay with you. Now, 92% of investors agree that companies with strong ESG performance deserve a premium and improved reputation. When you do all these things, of course, you will get a lot of improved reputation, word of mouth, and also on the favorable side of the regulation. Now, identify risks and opportunities. And to be honest, this is my favorite topics, identify risks and opportunities. Uh, since I have a risk management expertise, I'm well aware that there is two sides to every coin. So we don't only look at risk in risk management, we also look at the opportunities. It is the uncertainty that actually governs your objectives. The same thing with sustainability risk, because it's a risk. We have to look at what are the opportunities sustainability can bring to me and what are the risks that sustainability can bring to me as well. So when we report, and honestly, this is just human nature, when you put things in writing, you do discover that there are more issues and challenges that you thought in your head, and you can manage ESG related risks better, and you can also identify areas that you can create value. Okay? And take ownership of a company's ESG story. See, when you tell the world in the sustainability or ESG reporting in your own way, as a company, you will be better positioned to the public because it is coming from you. Nobody is saying it on your behalf. So it's always best to put your story yourself in the way you see it most suitable. And you know what is really saddening me? I talk to a lot of professionals and I discover that most of their organizations do sustainability initiatives. Unfortunately, these companies, they don't disclose it. And I often wonder, why don't they do that? There are only positive things when you disclose it, but hopefully by end of the year, and thanks to the CBB mandated reporting, we will see all of these activities and tasks that these companies are doing highlighted in their sustainability reports. Now, let's talk about the entire ESG reporting framework. Now, a bit of a disclaimer when you're looking at this slide, it's much, much bigger than this. I just kept those that I thought are a bit relevant. However, you can actually take the opportunity and Google all these other entities that are involved in the reporting ecosystem. And to be honest, this is the biggest drawback when it comes to sustainability, that there are just a lot of guidelines out there and a lot of reading that we actually have to do to know the direction that we have to take in the organization. However, you need to know that there is actually a difference between a framework and a standard. See, if you look in the general aspect in the top here, in the general aspect, you have GRI, which is Global Reporting Standards, and you have SASB, you have SGDs, you have integrated reporting. However, for example, GRI is considered a standard-focused reporting. What does a standard-focused reporting mean? It means it talks about certain topics. It can go into detail. And it is an inward-looking reporting agency that asks the organization to disclose its impact onto society, onto the external environment. Now, when it comes to SASB is the same, but for example, when we talk about TCFD, TCFD is a framework which gives you the general guidelines. There is also ISSB, which is the International Standards Sustainability Board. Now, that is a guideline and a principle-based approach that is actually looking outward on how the environment will actually impact the company. Now, we have also sector-specific like GRESB for real estate. We have stakeholder-specific, EcoVadis, topic-specific CDSB, which we do refer to it, and TCFD. We have actively request information from companies through questionnaire. They keep the investigation going forward. And passive, like rating agencies. Now, the biggest problem with rating agencies is that up to today, there is no unified reporting platform. So Sustainalytics, MSCI, Moody's, they will give companies different type of ratings, and the rating standard is completely different. For example, one is alphabetically rating the companies, while another rates companies based on a baseline of 100, while the other one would report companies based on low risk, medium risk, and high risk. And again, this is a drawback in the sustainability world. And we noticed as sustainability professionals that we do not really look at the rating face value, just like we do with the credit ratings, like Moody's, Fitch, and Standard & Poor's. When it comes to ESG rating, what you need to know, you have to dig deeper. You have to look how they calculated this rating. As I told you now, when it comes to how we report, you should know that there is financial materiality and there is impact materiality. Now, the word materiality means how something can impact your organization immensely, and that will be considered material. And double materiality means how the organization would impact the environment, so inside out, and how the environment will impact the organization, impacting its financial disclosures. So as I told you, when it comes to reporting inside out, we use GRI, while reporting outside in, we use ISSB. Now, let's talk a little bit about GRI standards, and this is absolutely my favorite, to be honest, standard. It's very clear. So if you have a free time, you can just open on their website and see how they're navigating the sustainability landscape. They have a very concrete set of guidelines, and they're really simple and easy to read. And the way that it was structured is pretty straightforward as well. So we have universal standards, we have sector standards, and we have topic standards. So you will see it divided that way within the GRI website. And universal standards, they are divided into three topics, GRI 1, 2, and 3. Now, you will notice that even in the CBB reporting guideline, they always start by talking about GRI 1, GRI 2, and GRI 3 because these are the main pillars. So in GRI 1, we have to make sure that we are explaining which reporting guideline we are following. Now, when we are doing that, there are two words we should watch out when we are preparing our sustainability reporting. If you write in accordance to GRI, that means you're 100% in accordance with GRI. However, if you write you are in reference to GRI, that means you are a beginner in sustainability reporting and you will grow to be an expert in this topic, hopefully, but you are just referencing the standards. And it's always better to start with the second. Now, in CBB, if you would read the CBB module, they've written reference to these reporting standards. So, end of the year, when most of these listed companies publish their sustainability reports, you will see in the first line in reference to, for example, GRI, TCFD, GHG protocol, because the CBB disclosure has referenced 3 or 4 of these international reporting guidelines. So GRI 1, you have to write a statement. You're following exactly which reporting guideline. And before that, of course, you will write that you are abiding fully by CBB mandatory reporting. Now, GRI 2, in here, you will talk about the organization, just general disclosures, the governance body, the committee that you have formed when it comes to controlling or reporting the sustainability landscape. And GRI 3, in here, you will talk about the material topic. So I will talk about the materiality on the last slide of today's session. But the word material, it didn't come first in GRI standards. It actually came, as long as I could remember, in the accounting standards. So anything that is important, consider what material. Now, sector standards, you will also notice that there are various sectors that were developed within the GRI standards to talk about the mandates of different sectors. For example, if you're in oil and gas, how you should prepare your report. If you're in financial sector, how you should prepare your report, and so on. However, if you notice that there is a topic in the sector standard that is not mandated by you, or basically it's irrelevant for your organization, then you must write it in the sustainability report and actually write that is irrelevant and you are not doing it in your organization. And this is, of course, according to the GRI. Now, topic standards. In the topic standards, this is here where we get specific. So we talk about environmental, social, and economical topics, certain topics. So let's look going further. What are these topics? So as I said, GRI 1, 2, and 3, they talk about identifying the organization material topics, which I will talk about at the very end. Disclosure on the organization's specific content, size, activity, governance, assess the organization to better understand the approach that you will take towards the last pillar, which is the topics. Now, GRI 11, 12, and 40, they talk about the sector standards. So, for example, GRI 11 is targeted for oil and gas. Now, let's talk about the topics. And this is the most interesting one, to be honest. The GRI 200 in the topic. So, if we go back, you will notice topics is the purple line here. So, they are numbered the 200s, the 300s, and the 400s. So, if we go forward, you will notice that the 200 talks about the economic dimension, which is associated, for example, with anti-corruption, how the impact on the financial position. GRI 300 talks about the environmental dimension, which you know what it is. It's basically your level of emission, your indirect and direct emissions. And we have the GRI 400, which they talk about the social dimension. Your diversity, for instance, or the diversity between male and female, the ages, yeah? Now, to go in detail, GRI will look something like this. So the 200 will talk about economic performance, market presence, indirect economic impact, anti-corruption, tax, anti-competitive behavior, and so on. The environmental will talk about waste, biodiversity, emission, materials, energy, and water, while the social will talk about much more. It will talk about, for example, employment, training, diversity, security practices, local communities, customer privacy, and much more. You can see it on the screen. But one thing to be noted that you will notice this year, because according to the CBB's disclosures and the fact that we now have to prepare sustainability reports, you will see most organizations actively trying, for example, to achieve diversity or to enhance training and education, or, for example, to tackle anti-corruption, whistleblowing, improve whistleblowing policies, calculate their emissions. Now, to the last part, we will discuss the CBB reporting. Now, this is exactly half of the presentation, so I hope you enjoy. Actually, it is a very well-written document. I enjoyed personally reading it, and I honestly think nobody will have a problem in reading this document. Now, this document, when it was created, sure, we will send the presentation, no worries. When this document was created by the CBB, of course, it was sent into consultation, and finally, they issued the final guideline in November 2023. And what I found really impressive, if you open the CBB website, they have created a common module. Now, ESG module is in the common module, and in addition, it's in every module as well. And when you open this document, you will notice that mainly it's divided into ESG-A and ESG-1. So for those who are used to reading CBB papers, ESG-A is just an introduction and model history, so you can skip that. But with ESG-1, it is divided, and this is where the information is. It is divided into two sections. Section 1.1, it talks about ESG key performance indicators, which references Appendix 1, which is ESG KPIs. And just to give you an idea before we progress, ESG KPIs talk about most of the topics in GRI that I just showed you. Now, 1.2 reporting process, it will talk about the reporting frameworks, global initiatives, which is already the slide that I showed you, which I introduced you to SASB, GRI, TCFD, the reporting framework, and the materiality aspect. Now, ESG reporting process, let's dissect the paper. So let's start with 1.1. In 1.1, it simply says that ESG report needs to be published or submitted to the CBB on annual basis. So I have bolded that statement. Now, ESG report must incorporate the ESG key performance indicators, and it can be a separate document or attached as part of the annual report. Now, what I really found interesting that they didn't really keep a date that they required on 31st December, but naturally, all companies, they would submit it alongside their annual reports. And I have seen many examples of sustainability reports in Bahrain. There are some companies, for example, like NBB, they would publish the annual report and the sustainability report in just one. And there is a bank like Arab Bank, they will publish the sustainability report as a separate document than the financial statement document. Now, either or, it doesn't matter. They both look great as reports. Now, ESG 1.1.2, it talks about the branches of financial institutions. So you can either submit ESG report of their own or they can consolidate it in one. So both is also accepted. Now, this is the most important one, which is the third point. Listed companies and licensees must comply with the following requirements. First and foremost, just like accounting principles, we have to ensure consistency. Any methodology that we use to calculate emission, for example, any methodology that we use, for example, for whistleblowing or whatever, we have to ensure consistency over time to be in cases where certain breakdowns are not easily discreditable or relevant, alternative methods or simplified reporting can be explored. For example, if you notice that the calculation is very complex, you can explore how to simplify the calculation, but you have to submit evidence and support for the assumptions that you are undertaking. See, organizations must refrain from providing generic or simplistic disclosures. Why is that? Because that is in itself not in line with sustainability practices. See, sustainability is the only goal that we share with the entire world. And you don't want this to be considered a tick in the box exercise. You want this to be considered as something that will add value. Every action in every organization and by every individual can add value to getting closer to achieving our sustainability goals. So you must, as an organization, refrain from providing any vague statements about how you are approaching sustainability. And in other words, we do call this green wishing because most organizations, they would say that they are doing green, and they are, like their practices are completely legitimate. It's not fraudulent, but they are green wishing. That means the impact they are adding is minimal. Now, of course, when you are preparing sustainability reports, you have to be very clear with how you are writing it because you don't want to be caught by the regulator that you claimed something to be sustainable and it is not. Because if that happens, it will be considered as greenwashing, which greenwashing is considered as a fraudulent activity. While greenwashing, it's not a fraudulent activity, but it's frowned upon. Now, the companies must avoid greenwashing, which is the point I just explained. And to be honest, if you read the CBB rule book, they didn't really tell you how they will check these reports for greenwashing practices. And I believe they will tackle that from their end. But just like all the other regulations, they will dissect every report on its own. Now, E, provide definitions, reference, and assumptions were relevant. Of course, that goes needless without saying. And F, provide an explanation in case of non-partial or partial disclosure of KPI. So if you're not adhering to any KPI, you have to keep it in the sustainability report. And mention next to it why you're not adhering to this KPI. This is exactly what's also stated in the GRI reporting. Now, CBB highlighted 10 principles for us, or KPIs for us to disclose. So we have E1 environmental oversight, energy consumption, energy intensity, energy mix, greenhouse gases, emission intensity, climate risk mitigation, water usage, waste generation, emission targets. Now, what you need to know is I cannot really cover the entire platform that was covered in the CBB reporting. Just 2 points I can cover, which is the environmental oversight and the greenhouse gas emissions. Yes, Mohammed. Okay, so environmental oversight, yes, this is what's written in the environmental oversight that the company has to provide management and board oversight on climate-related risk and opportunities. So a statement has to be written, just a generic statement about the policies, the environmental impact that the company needs to follow, policies, commitments, goals and targets, responsibilities, specific actions. Now, this is an example of the governance by HSBC. If you see here, it is showing the process, the frequency of training, the subcommittee and accountability, examples of the board and relevant board committees. Then we have Citibank's net zero. They didn't really write a statement, but they kept it in this way. That's also acceptable as a statement. Now, if you reference, each KPI has a reference point. So this reference point, they have referenced the GRI, disclosure 1 and 2, and they have also referenced A and B TCFD. So as you can see, when you open the KPI and the regulation related to that KPI, you will notice that this TCFD is talking about this landscape in front of you. So you have risks divided into two sections. We have physical risks and transition risks. Now, physical risks are risks that can happen and impact your physical layout as an organization. Transition risks are the risks that can happen because you're transitioning to a sustainable model. On the other hand, opportunities, it can have like resource efficiency, new markets, products, resilience, which is like really important because as banks, in light of all these mergers and acquisitions, resilience is really important. Companies actually that do ESG and sustainability have more resilience than other companies who don't. Now, then we have to do strategic planning and risk management, and this will ultimately impact your financial statement. Now, like with all other regulations, you have to have a governance body in place to review, guide the strategy, setting the organization performance objective, monitoring implementation, overseeing major capital. So basically, just put the right person at the right job to do all these things. So there should be a governance and a framework to reporting the sustainability risks and opportunities. And you have to be mindful that risks, they can be short-term and long-term. For example, in Bahrain, our short-term risks from ESG practices, for example, it can be changing in products, regulation, but our long-term risk, for example, are the physical risks, like the sea level rise. Now, risks that are material in time, risks and opportunities, concentration of credit exposures, and transition or physical risks and company resiliency. Yes, Gulnar, definitely we can share the presentation. If you would send an email to the banking@bibf.com, anyone who sends an email, we will send them the presentation at the same time. Yes? Now, E5, greenhouse emissions. This is basically the hot topic that all bankers are talking about, how to calculate emissions. So when you come to calculating emissions, you have to know that you should calculate it according to the greenhouse gas protocol. Now, it has a website, you can log in, there is a calculation methodology, but most importantly, you have to classify your exposures into scope 1, scope 2, and scope 3, your emissions. So we have scope 1, which is the direct emissions that are in-house, like in your factory, that are not acquired. Scope 2 are indirect, which you have to acquire. You have to buy this electricity or this heating. And finally, is scope 3. Now, scope 3 is the most important one for the financial sectors, at least, and also, let's say, manufacturing firms, some of them, because you have to calculate the upstream and the downstream, the entire supply chain, and the amount of emissions. So, for example, every loan we give, every investment we make, we have to classify it as a scope 3 because we are in charge of, for example, our customers' emissions. Now, according to GRI 305, this is how you would calculate your total emission, and this is by all means not a simple task to do. This will take a lot of time and energy from financial sector and from sustainability professionals. The first thing that will take time and energy is for every person in the bank or in different industries to classify all their exposures into scope 1 and scope 2 and scope 3. And in that, like you see, HSBC, they have done that. But when you're doing that, you have to divide it per sector as well to show the public and the stakeholders where is your largest emissions. Now, this when it comes to the governance. Now, this is also what was reported by Arab Bank, direct and indirect. Now, let's come to the social aspect. Now, when it comes to the social aspect, two things that we will tackle: total workforce by sex, age group, and employment type, and S9 human rights. So what's written in the CBP module that you have to report the total number of employees as an amount and as a percentage. If you look here, the unit is written. So you have to report the gender, you have to put the age group, the employment type. So if you see here, this is just example how Arab Bank and HSBC reported per sector and per level, for example, the gender mix, and also they reported by age group. Now, human rights, we also have to disclose our commitment to human rights. So we have to disclose our policies if they exist in the organization, our commitments, our goals, our responsibilities. And as you see here, HSBC, they have done that beautifully. They have written an entire paragraph about human rights, and they also wrote the risks and the stakeholders involved, like the employer, the buyer, the personal customers, and who will be in charge of what. Now, the word that is written in HSBC, which is useful for you to know, when you say inherent risks, inherent is the existing risk that is always there. Now, once you impose controls, it becomes what, let's say, the risk will decrease. So inherent risk is the existing risk that all these stakeholders will be affected by. So then it will convert to a residual risk. Now we have a governance. The governance part is the last part that was written in the CBB module. So they wrote all these KPIs when it comes to governance. There are 10: board composition, collective bargaining, whistleblowing, data privacy. And again, I selected two to explain. So board composition and whistleblowing. And you will notice that in the board composition, you have to talk about the board size, the diversity. No longer it is accepted worldwide to have board members that they're all the same group, the same gender. Worldwide, there is a global movement to keep boards as diverse as possible, to increase the level of advocacy and to just bring a different opinion on the table. So report composition of the board, like executive, non-executive, independence, the tenor representation. So as an example, Arab Bank, they have provided this as well. And for example, number of boards that are executives, number of board members who are independent. Now, whistleblowing policy in which you just provide a description of how you would actually approach the whistleblowing, the mechanisms that are used for reporting any fraudulent activity, or like what happened with Cynthia Cooper and the Enron case. So having this clause is very, very important. It's part of corporate transparency. So you have to provide just a simple description of how you're doing it. And as an example, HSBC, again, used an entire paragraph to write it. So this is all expected to be seen in sustainability reports. Now, in the 1.2 ESG reporting process, so we finished the 1.1. Now we have come officially to the 1.2. Now, the 1.2 talks about that you have to report adequate governance, and you must have placed adequate governance framework and reporting process. And for governance, it's really important because I hope you noticed that a lot of these listed companies, they started hiring sustainability professionals in the last 1 year, and they are formulating their sustainability departments, and we have now quite a lot of chief sustainability officers. So that is really nice to see. And also, we have to have a governance framework of reporting inside the organization for sustainability. So we have to know who does what. Now, 1.2.2, a standardized set of ESG metrics should be introduced with clear definitions within the company to help them in their sustainability journey. And it is, just like they said, it is a journey. So it starts with understanding why we do ESG, which I must say, I'm really impressed with all the companies in Bahrain. They have showed a lot of commitment to educate themselves about sustainability and ESG practices. So we have officially, I believe in Bahrain, we bypassed the sustainability and ESG introduction phase. And now, more or less, a lot of people understand what it is. Then we have to construct the working group, understand the reporting frameworks. Now, the reporting framework can be a little bit challenging, but the good news is, thanks to the CBB documents, if you read it today and just take 5 minutes, just go open CBB rulebook and just open the common volume, and you will see it there. It's a very nice paper, so you will understand everything. It's comprehensive, and all the reporting frameworks are actually written in the last page, so you can understand it from there. Now, let's talk about conducting a materiality assessment. What is a materiality assessment? Now, different organizations, they need to highlight when it comes to the sustainability world, what is really important for them? What is the most important topic? Is it environmental? Is it social? Or is it governance? And if it is, for example, social, what is the most important point for me in social? Is it diversity, or exactly what should be the most important topic? Now, for that, we have to do something called as a materiality assessment. Now, if you notice here, this is also written in the CBB document, the concept of a materiality matrix. So materiality matrix is basically, you will see organizations this coming year and the next year asking their stakeholders about what is the most important topic for them when it comes to sustainability. Because as I told you from the beginning of the session, that this topic is a stakeholder-centric approach. And the organization, what they're going to do, they will map all these topics against this matrix. What's important to stakeholders and what is important to business success. Now, if it is classified on the top here, then it's actually significant. So CBB provided this actual image. So if you see here, this top right box is actually considered material. Now, if it is important on operation, but low on stakeholders is considered significant, And if it is high to stakeholders but low to business, it's considered moderate, while if it's low, it's considered minimal. So you might say how this is important. It's really important because if we go back a few slides here, you will notice the result of this assessment will be translated in a set of targets and goals. So your organization will be doing a lot of initiatives in light of this materiality matrix assessment. And finally, once you're all done, you will actually report your ESG or sustainability report. Now, the ESG reporting process should include the following step, and this is the final point. First, understand the importance of ESG, construct a working group, as we have said in the previous slide, understand the reporting framework, and conduct a materiality assessment. And on that note, I hope this session, and I apologize for going too quickly. I tried to benefit everybody as much as I could. Feel free to scan my QR code to contact me on LinkedIn regarding any question when it comes to the CBB reporting module, the ESG reporting module. And feel free to ask me any question about any risk certifications that you might want to take in the future, like sustainability and climate risk, or if you're interested in CFA ESG investing certificate that is also delivered here. You can also ask me about the master classes that we are doing here in VIBF when it comes to sustainability. So thank you very much for listening. I'm highly honored that I delivered this session, and thank you for listening to me the entire hour. Thank you very much. I take it that there are no questions, so thank you very much. Thank you.